Good morning, everybody. Welcome to day 3 of ICES's TCI Week 2023. We have a really interesting discussion coming up about sustainability and how to embrace it within the trade credit insurance sector, and some really interesting speakers to talk about that topic. Before that, just to quickly recap what we looked at yesterday. In the morning, I had a conversation with a number of people from across the market, also from across the insurance regulatory world and the banking world, to talk about regulation, where that's going, what's happening, and what you need to look out for. Then in the afternoon, we had an illuminating discussion about the opportunities that might exist in sub-Saharan Africa in credit insurance. And there were some sobering realities and also some glimmers of hope for opportunities that might arise there. So please check out the recordings from those sessions. They'll be on our website soon in the resources page. So if you go to our website, you can see it at the top and click through to see those and all other sessions from this week. But without further ado, I'll hand over to our chair for today's discussion, Andreas Hillebrand. Andreas, over to you.
Thank you very much, Daniel. Good morning to everyone, and welcome to our panel on embracing sustainability in the trade credit insurance market. We've brought together a number of professionals that have to deal with this topic from many different angles. We will discuss trends in the market, challenges, which are very real and very concrete to all of us. Hopefully we can get a little bit more into the details of the problems, but also the opportunities that the sustainability challenge will bring to us. I'm Andreas Hillebrand. I'm the head of credit and surety and political risk at Swiss Re Corporate Solutions, and will moderate now the session for about 60 minutes. May I ask the other participants to introduce themselves? Shall we start with Karine Cavalier, please?
Hi, Andrea. Thanks. I'm Karine Cavalier. I'm the head of ESG of Atradius, and I joined the company like 10 months ago already. And before that, I was working as a director of ESG and sustainability for a Spanish bank based in Barcelona. So very happy to be joining this call on ESG today. I think it will be a very interesting topic.
Thank you, Karine. Shall we move to Christine?
Yeah, sure. Good morning, everybody. I'm Christine Klebel, working for Hannover Re in the Credit Surety and Political Risk Department since 10 years. I'm a senior underwriter, and I'm taking care of primary insurance companies from Latin America, the MENA region, Pacific, and Europe, so quite spread of regions. And I'm glad to be here and happy to answer the questions.
Thank you, Christine. And then last but not least, Andrew, who's having some connection problems. Andrew, can you hear us?
Andreas, I can hear you. Yeah, apologies. I think my internet has not been great this morning. But no, thank you for inviting me onto the panel. I'm Andrew Beachy. I'm the Managing Director of Tierra Underwriting. It's an environmentally focused MGA. And hopefully my internet will work throughout this, but I'll keep my fingers crossed.
Thank you, Andrew. Very good. So let's kick it off. So let's start maybe with Karine. Now, Karine, you just joined Atradius. You have to deal with the ESG topic really from all possible angles for our trade credit insurance. Can you elaborate a little bit on maybe some of the milestones that shaped the sustainability vision at Atradius, and how experiences, your own and the company's, molded or influenced the way you are trying to address this topic?
Thanks for your question, Andreas. Well, I would say, as it goes for the market in general, we have just taken what I would call the first step of a long journey. First of all, we have made sustainability central to our vision, and we also integrated it into our purpose of managing risk and enabling trade. But also, I think a good, probably a striking milestone is that at the end of last year, we started by formulated ambitions and objectives based on 3 pillars: planet, people, and prosperity. And those pillars are related basically to ESG framework. And I was a very first, let's say, exercise to structure some of the actions we had already developed at Atradius, but also in a way that was given some kind of directions for the new actions to be implemented. But now, together with our parent company, TCI, we are currently drafting what is called a new sustainability master plan for 2024-2026. And in order to do that, and it's very critical for, I would say, any kind of businesses, not only like a credit insurance industry, we carried out what is called a double materiality analysis, which enabled us to, in a way, identify and prioritize the most relevant ESG aspect that we should address in this future strategy. And in that process, actually, we have involved some of our stakeholders, key stakeholders, such as TCI, for instance, that also help us to shape this strategy, this future strategy. So this is more or less for the roadmap. So we should be able to have like a path to follow in the following years. But we also implemented, and that's, I think, very critical for any organization who wants to embark on that journey, appropriate ESG governance structures. So in that sense, for instance, we created an ESG committee, which is chaired by our CFO. And I've been appointed like a couple of months ago, as you already know, in order to promote, drive, and execute all the ESG initiatives at global level at Atradius. As for the actions, I would say, and that's a very important thing to mention, that our philosophy, in a way, is to set credible example and foundation for all the company's commitments to responsible practices. What I mean by that is we have to focus first on being a responsible and sustainable organization ourselves, to make sure that we build trust, let's say, with the rest of our stakeholders. So what does it mean being a responsible employer, promoting diversity, but also making sure that you minimize the environment aspects, for instance, of your premises or offices, just to mention a couple of examples. The second step is like even more critical and also very challenging, and I think we will have this debate today in that call, is making business and trade, let's say, more sustainable. And looking beyond, this is our view, of our own position in the value chain to make sure that also our business partners, in particular our customers, are also, let's say, more sustainable. And as a credit insurance, you have obviously a couple of ways you can support your customers, two fields. I would say first, you need to probably have a clear understanding of how ESG translates into credit risk, but also how or to which degree ESG performance can have an impact or is linked to their credit worthiness. That's one. And that's very difficult, let's say, challenge for any kind of credit insurance company. Secondly, you also want to support your customers, right? And one of the way you can do that is by sharing the ESG insight that you gather. And this is what we're trying to do through an ESG rating pilot we are carrying out right now, to make sure you gather information about, your customers, about ESG performance that you gathered either via, let's say, external providers, also because you gather some reports. And then it enables you to open a discussion about the sustainability journey and transition plans, and for them to be a more sustainable company, but also providing best practices. That's why it's very important to be, first of all, a credible organization and to get the knowledge to be able to, in a way, support your customer in this transition. And the last thing I always mention, which is also very critical when you implement ESG practices at a company, is you have to make sure that ESG is also embedded in all the organization, because a successful strategy really depends on all the areas of businesses and geographies that will actually implement those ESG actions. So in that sense, what we did, and I think is very critical, is to create awareness. So we develop a sustainability training mandatory for all the employees at Atrendius to make sure that we had a common language of what ESG. And obviously we are among experts today, but you would be surprised that this is still like a terminology that we have to define to make sure that also all the employees at any level can participate and contribute to this strategy. And it's true not only at employee level, but also obviously at management board level. And I think it's critical to have your board on board and making sure that they have the right information in place to be able to take the relevant decision. So yeah, that would be a little bit the path we followed until now, with a lot of challenges ahead still.
Thank you very much, Karine. And I see a lot of similarities with what we also do in Swiss Re. Maybe we'll have opportunity to share a little bit some of our experiences. Now, to change slightly the angle. So there's a lot of regulation coming out towards our market. And these regulations are evolving very quickly. How are you navigating what I would call this regulatory tsunami coming our way? And what are some of the key developments or most important developments that you're looking at this point in time?
It's funny, Andreas, because you're using the same terminology I always use, like tsunami, because this is exactly what it is. Yeah, as a matter of fact, it's clear that regulatory frameworks can and will probably, as a good point, accelerate, let's say, the integration of ESG principle in businesses practices. For instance, the increasing development of regulation related to social environmental aspects that can promote diversity at board level, but also drive companies to reduce, let's say, their carbon emission and adopt cleaner energies, might influence, obviously, their, all the practices. But I think in particular, and probably linked to the discussion we have today, I think probably the corporate, or most probably the corporate sustainability reporting directive in force since the beginning of this year will increase transparency and accountability and will allow like stakeholders to make more informed decisions. But it has also like a different effect. Obviously, it implies for many companies to start gathering exhaustive information in relation with different aspects of sustainability and related to the ESG framework. And the way I see it is that for large companies, sustainability reporting was first like voluntary, and they had, let's say, at least a decade to adjust themselves and gather this information before it became actually mandatory. And I would say that the main challenge is probably for small and middle cap companies that are just starting this journey. So they have first to get the knowledge of what ESG and sustainability is, getting familiar with like, this terminology, and starting gathering all this information within their organization with sometimes little capacities to do that. And I guess this is the real challenge here. And it's a challenge, but it's also an opportunity, because I guess we will discuss that today. But for a credit insurance company, for the reason I was saying before, obviously getting to know the ESG performance of your customers and your buyers is critical. And you probably can't do that if you don't rely on like public information and standardized information. So it is both critical in a way that's very difficult challenge ahead, but also critical in the sense that it will probably enable us to work towards like the goal we have of being a company that also promotes sustainable trade within our customers.
Thank you, Karine. Very interesting. So maybe it's a good time for me to maybe add a little bit my experience as a business leader. So as somebody who actually needs to find a way to somewhat implement in the business the standards that the company defines in a current way in the business model that we apply. I agree with a lot of your statements, Corinne. I mean, first of all, I think while I'm quite passionate about the topic, I had to realize very quickly that this is not a quick fix. This is a very long journey, not only because the carbonization, obviously, challenge is a very long one, but also because we simply very often lack the standards, like the measurement criteria. So there is an enormous amount of work that we need to do with the sector as a whole to define a way to approach it. I mean, the complexity is daunting. The number of stakeholders is constantly growing, and there's many different angles to the topic that play a role ultimately. The way I look at it, ultimately, it's three things that I need to somewhat square. I mean, one is focusing on the right matters. Ultimately, the topic is so broad that I think if we don't focus on where we can have an impact, or we can actually help to manage and steer the portfolio that we're running, I think it's going to be very difficult. You can very easily boil the ocean. The second one is, without being able to measure, I don't think we will be able to steer anything. It's going to remain a topic of words, but a very hard one to then implement in daily business practices at the level of, for example, my underwriting colleagues. And the third one is incentives, right? Of course, we all want to do the right thing, institutionally for sure, as people as well. I think that's the easier part. But at the end of the day, we need to build structural incentives in the way we do the business to make sure that we position the portfolio in the right direction. That is a very big challenge, and one that is debated very actively. Banks, for example, often apply discounts to sustainability, to sustain a so-called sustainable business. We, at this point in time, struggle with that quite a lot, honestly. Main reason is that we try to cost technically, so we need to see a value. So our risk assessment needs to appreciate the value on the credit risk, for example, of sustainable initiatives, and making that link is fairly difficult. As an organization overall, we have two ambitions. One is obviously advancing the net zero transition, so it's all about the decarbonization efforts, and the second one being a large multi-line reinsurer, similar to Hannover Re. It's really building societal resilience. So that's the element of climate adaptation, disaster resilience, which is very much at the core of an insurance and reinsurance company. For credit, the focus has to be on decarbonization, in my view. That's where we can have an impact. And in terms of the measurability, I must say that we're far away from having a standard for carbon accounting that can really be applied at the level of granularity of what we are doing. Obviously, as an organization, we work on the definition of such standards, but we're still quite far from being able to truly steer a business at the level that we will need to do. So that would be a little bit of my experience dealing with the challenge. Why don't we move to Andrew? Andrew, you've set up a company that has sustainability at the core. It's the value proposition, which obviously makes a lot of sense given the importance of the topic and the relevance for us. But then, given all these challenges, how can you explain a little bit? How do you get to the concept, or even to the idea? And what do you think are critical factors for you to ultimately be successful in this very exciting venture of yours?
Yeah, thanks, Andreas. I suppose we've got a slightly different approach to the whole sustainability question, and we're being very focused on one area. So maybe the best thing I can do is start by a little bit of background on Tierra, just to kind of those that don't know who we are. We're an MGA, managing general agent, that was set up about 2 years ago to focus on non-payment insurance for environmentally beneficial transactions. Green transactions is essentially the specific type of transactions that we want to cover. Basically, anything that has decarbonisation at its core. So, when we talk about sustainability at Tierra, I guess we're very focused on the environmental side of the equation. So it's all it's narrowly focused on that. But I think that's sort of, as we'll get to in terms of answering your question, Andreas, I think that's one of the key things that can help to make us successful. I think we've tried to be as sort of narrowly focused as we can to allow us to develop a sustainable business. So yeah, at day one, we're really we've launched to focus on project financing transactions. So we're looking at transactions in the energy space, so wind, solar, battery storage, etc. But as we're growing, we're sort of broadening our scope to include trade and corporate finance, essentially with a view to building out a fully a green credit MGA across the space. And we're starting to do a couple of deals in that wider space. So we're sort of broadening where we're at right now. But I suppose regardless of the type of transaction that we're covering, whether it's long-term, short-term projects, etc., everything, I guess, at the heart of what we do, everything needs to be green, because that's ultimately the mission of the company. So we are genuinely trying to do something to help this fight against climate change, and that's really why we set up Tierra in the first place. But of course, that's one of the most interesting, I guess, challenging things about setting up a company that really focuses on environmental goals, is kind of trying to stay true to that mission. Whilst you've got to try and make a successful company, it's got to make money over time, but ultimately you want to try and stay true to that core mission, and that's not always an easy balance, I think. I guess fortunately we're in a sector that's growing fast, so there's plenty of opportunities. As we all know, the world needs to decarbonize most industries, so I think we will have plenty of opportunities. But as I say, I don't think we need to not get sidetracked into doing deals that we don't believe are truly environmentally beneficial. We've been pretty strict about this to date. If we're on the fence as to whether or not we think a deal is green or not, we'll turn it down. So I think that the mission certainly comes before the profit at the moment. And I guess that's what makes it exciting, right? I think it's, if we can grow a company that remains true to that sort of green environmental agenda, but also helps, support more financing into that space, and can be successful, then I think that's a really exciting thing. It'll help more projects get built, of course, and hopefully maybe add a signal to others in the industry that, you can build something very specifically environmentally beneficial, but still make it a success. But yeah, so you started by asking how do we make it a success as a company, I suppose. And I think the key that we sort of focused on from the launch of Tierra was really trying to bring something different to the market, try and do something that others aren't doing. And for us, that's really a combination of having the right internal expertise, but also this specific focus that I'm talking about, so that we can really, fully understand the sectors we're looking at, have the time to do it, and have the expertise in-house to be able to really understand the space that we're working in. And we're gaining traction in the market, so it seems to be working so far. So yeah, I think it's about focus, and I think that's something that the clients we're dealing with are appreciating, I think, and somebody that is very focused on a particular area and can bring some expertise to that conversation.
Thank you, Andrew. And given you mentioned that you primarily focus on projects or, let's say, single risk non-payment type of opportunities, are there any specific factors that you could highlight that you consider when you assess opportunities and decide whether it fits, your risk appetite, but also mandate? And second part is, are there some areas that you would like to highlight that you deem are particularly interesting, without sharing too much of your IP, of course?
Sure. Yeah, and you're right. As I said, our focus at the moment is on the longer term piece. So it's mostly project financing, but we're doing some shorter term stuff. We're trying to diversify the portfolio, obviously, to balance it a bit more. We can go out to 20 years, but not every deal we want to do, we want to go that long. So yeah, we're trying to balance the portfolio a little bit more with the shorter term transactions as well. But I guess regardless of the type of deal, I suppose we look at two factors really on every transaction, and that's obviously the risk factors that we all would look at from a credit perspective, but then also environmental factors. And for us, I guess we would say, they're given equal weight in our underwriting process. I guess the risk factors I probably won't touch on too much here. They're very deal specific, and I think that's a different conversation. So maybe the environmental factors is something that's perhaps more interesting for the purposes of this conversation. As I say, it's a very important part of our underwriting process to make sure that we're doing deals that we think are beneficial. As I say, if we don't think a deal is particularly environmentally beneficial, then we won't write it. So I guess how do we do that? It's an easy question. It's easy to say, we'll do green deals, but then how do you actually do that? And that in itself is not necessarily an easy conversation. So, we'll like many people, of course, we'll use the EU taxonomy as a starting point to sort of determine whether or not a transaction fits within our broad guidelines. But we'll try and layer in a bit of an internal view on different sectors as well. I think there's a little bit of political bias in the EU taxonomy, so there are certain sectors that we probably won't cover that are covered in there. But it's a very good guide to start with in terms of the type of sectors that we want to support. We'll do a bit of analysis on a sort of emissions profile of projects. So we'll look very closely at the CO2 emissions to really make sure that it is what we would determine as green. There are certain sectors out there, I think, waste to energy being one, where actually you look at, the emissions profile is actually pretty high, even though these type of transactions are often given a green label. So, we'll try and avoid those type of deals where the emissions are actually pretty high. And then thinking about the sort of corporate side of things, if we're looking at corporate or trade transactions, I guess our focus is really on the sector the company operates in, the use of proceeds for the loan. We want to try and make sure that the money's really being used for decarbonisation purposes. I think we're seeing a lot of loans, and I'm sure we all see the same, a lot of loans that where the green credentials are probably, I'd say, marginal at best in certain transactions. And I think it's interesting to try and make that determination around how the money is going to be used and how useful it is from a decarbonisation perspective. And I guess the third factor around the green angle, I suppose, is we've got a preference for transactions that have a high degree of additionality. So from a climate change perspective, so we would sooner look at greenfield projects, bit of a preference for them over, say, refi transactions or companies that are operating in sectors that are truly transition sectors, rather than adding in a few green metrics into a normal loan framework. So trying to get to that level of granularity, I suppose, around the type of transactions that we look at, and being honest about the deals that we want to support. But the opportunities, Andreas, you mentioned, I personally think the opportunities are vast. We're obviously seeing a lot of growth in the renewable space, and that's only going to increase over the next, as we roll out to 2030, 2040. But every industry's got to decarbonize, right? It is a wholesale decarbonisation process we need to go through. So, I think the opportunities, not just for us, but I think as our market, the credit market in general, I think are exciting, obviously challenging because it's a new world we're entering, but it's, there's a whole process that needs to happen. And I think insurance is extremely, extremely important in helping that process to happen, and credit insurance in particular. Whether it's heavy industry that's got to decarbonize, or transport sector's got to go electric. I just think there's lots of opportunities for us and for our market, and so I think it's an exciting time from that perspective.
Thank you, Andrew. This is obviously ultra fascinating, and we could spend probably the rest of the conversation to dig into all these topics, but it's really interesting to hear your perspective. Let's maybe change a little bit the perspective now again with Christine, who's working in Hannover Re, so obviously operating a bit more distant from the primary market. So Christine, as a reinsurer, where do you see the very specific challenges in your job when you have to underwrite with sustainability in mind?
Mm-hmm. Thank you. And I think also one point you already mentioned, this is also what comes to my mind thinking about underwriting and sustainability, is it is about resilience building, because the implications of climate change represent the most significant sustainability risk to Hannover Re as a reinsurer. And think we have a strong need to closely monitor, analyze, and control those in the end. And this is where the reinsurance market and we as on the front to analyze, monitor, and see the impact. And particularly the focus of climate change risk analysis is currently on the changes in the frequency and severity of natural catastrophes. Because the physical risk effect our property and casualty reinsurers, but also have an impact indirectly on the life and health reinsurance. And because the change in climate and weather events have the impact of more frequent and losses, and usually we have seen the losses are higher as well, and it an elevated numbers of the insured groups of persons, which in turn for us is associated with a big financial risk. And a big challenge is also that many forecasts and connections are subject to a lot of uncertainty, to a high level of uncertainty. And the more far away it is in the future, the more uncertainty we have to deal with. And in order to analyze possible consequences, we have developed scenarios is to enable us to evaluate the physical, but also transitional and liability implications of climate change for all our business activities and initiate measures for steering the business. So we usually model various weather events such as floods, seasonal droughts, and tropical cyclones. But also a big challenge being a reinsurer is that we are even more far away from the business itself because we are behind the primary insurer. So therefore, for us, it is essential to understand the primary insurance approach when it comes to sustainability. And you only can get that via a dialogue, learning about the business plan, what is the ambition to the transition to net zero done, and yeah, that's are the challenges.
Thank you very much, Christine. And you mentioned already the need for obviously engagement, but do you see that sustainability requirements will change in other ways, the way you as a reinsurer approach the market and your clients?
Yeah, I think mentioned so the difficulty or the challenge to understand the primary insurer's approach towards the transition, how to get there, will be an essential part in the future of underwriting as a reinsurance underwriter. Because it is essentially important, because usually we reinsure portfolios, and so therefore we just cannot assess single risks of the book regarding ESG criteria, and therefore we depend on the insurance market and how transparent and how engaged they are. And of course, as already mentioned, what plays a big role are green emissions, but also regarding the S and the G part, ESG criteria, that will become more important, and for us good to understand how is the transition plan, and we also need to explain our position to the market and finding a solution together with the insurance market. But also I think the general global transformation to a more sustainable economy, including what I mentioned already, the transition to net zero, leads also to a variety of opportunities and new business fields. And also, as Andrew already mentioned, they have demand from the market. So these are kind of opportunities we need to exchange. The market needs to change, and also to see where the market can benefit from it, or we as a reinsurer. And I think as the financial sector is one of the main supporters of the sustainable transformations, as all measures need to be financed, insured and reinsured, it is also a good opportunity from that point of view. And generally, we expect that both the real economy and also the insurance industry will increasingly address ESG issues in the future as well. And various activities of the different industries in the direction of the sustainable transformation will lead to a change in the ESG quality, but also on the composition of the risks to be insured. And such positive or desired changes will be reflected in the classical insurance products, and where we also want to promote and strengthen this process as much as possible. And also to have not only the cooperation with the insurance market, but also with high-level organizations such as governments, the UN or the World Bank are engaged in this topic. And so I think global partnerships are very strategic points to strengthen or to promote the ESG initiatives. And as I also have mentioned, some also factors like S and G are important. It is also important when you see what the impacts of climate change are, and therefore we also contribute to the overall sustainable transformation by offering reinsurance solutions that help to cope with the impact of climate change, which are usually very negative for also the poor people. And in this regard, it is important also to think about the topic to close the protection gap and also help people that are in areas which are so far don't have access to insurance and reinsurance. And this is also where we are working on. And as Karin already mentioned earlier as well, it is also about responsibility to help people to cope with such negative impacts.
Very good. Thank you very much, Christine, for sharing the perspective of a reinsurer. I've seen that there are actually already a couple of questions. So maybe let's see if we should answer a couple of those first. One is, do only clients need to be ESG screened, or also buyer portfolios? Very relevant question. Karin, would you be comfortable answering? As this is probably a topic that is...
You look me smile and you say that's for Karin, right?
Yeah, I thought that fits you well, yes.
I mean, first thing first, I think that the conclusion we can draw from the conversation we have right now is probably we're lacking of data, right? So what I mean by that is that if we want to include like ESG criteria in underwriting policies, whether it's linked to customers or buyers, we first need to build on I would say robust methodology. And I guess we have already quite interesting information for large companies, reason being that they publish like a non-financial report, sustainability report, etc., and it's audited and so on. But I don't know about your business, Andreas or Andrew, but I would say that probably small and middle cap companies for credit insurance like ours can be out of 80% of our business. So we have to make sure that we have objective criteria in place before we can come up with, ESG, before taking into account ESG into underwriting policy. So first thing first, I think we know probably more about our customers than our buyers. And step by step, obviously, I totally agree that our business is more about buyers than customers. But we really need to rely on trustable, reliable information to do like a robust methodology. And yeah, I mean, the expectation is high. We were discussing, the Corporate Sustainability Reporting Directive. It's already in force, meaning that for large companies will have to publish according to this new directive already like in 2025 based on 2024 data. And it's an ongoing process. And for small and middle cap companies, we will have to wait for a couple of years more. So I guess that as soon as we have better information, then we will probably improve and enhance the model we can set up for ESG criteria, including customers and buyers. But first thing first.
Absolutely agree. Absolutely.
I don't know your view, Andreas, on that, but it's very difficult.
It's the same. We focus clients first. I think it's already going to be a huge journey to get that right. But obviously, you need to look at the buyers eventually too, if you really want to cover the full portfolio. The same goes, if you do bank business, right? I mean, who are you assessing? The bank itself, or are you assessing the underlying? You obviously eventually need to assess the underlying.
Exactly.
Otherwise, it doesn't really work. But step by step.
Yeah. And it's interesting also related to that, we were discussing decarbonization strategy, right? And so if we look at all these, all the alliances now that in a way give you guidelines to set up a global commitment of being carbon neutral, for instance, for 2050, usually credit insurance would first focus on customers because they have also to deal with engagement target, meaning that they have to engage with them. So it's obviously easier to engage with your customer than with your customer of your customers, because it would also imply to interfere in a way in the trade, right? But it's already like very difficult, because if you have to set up like decarbonization as target without knowing, real data of the CO2 emission of your customers, it's a big challenge. You're still like running a lot of estimation, and you base target based on estimation. So I think that we need really to make sure that we have proper information in place if we're going to assess either buyers or customers, either for CO2 emissions exposure or just for ESG rating in general.
Thank you, Karine. I saw there's also a question for Andrew. It says, when assessing a transaction, are the green credentials taken into account in pricing modeling, or are they more a gatekeeping tool to decide whether you want to cover a deal or not?
Yeah, that's a good question. I think for us, it's primarily a gatekeeping tool. So it's sort of a bit of a binary, do we want to do the deal or not based on its green credentials? It's not a sort of sliding scale of, we might change the pricing. So I think from an underwriting perspective, for us, it's very much about, do we want to do the deal or not? Having said that, I suppose it's interesting, isn't it? I think probably, there's a lot of liquidity interest from the banks in doing green transactions right now. So in some respects, I think, greener transactions are somewhat discounted anyway, just due to market forces. And I think, maybe margins are a little bit thinner on the type of business that obviously lots of people want to do. So, there is a bit of a discount in the business coming in the front door, if you see what I mean, in terms of margins. But no, internally, we don't use green as a pricing part of our pricing mechanism. It's more a tool to decide whether or not we want to do the deal.
Yeah, I think it's probably common. Same for us, at least. There's another questions. I need to reconstruct it. Okay, so it says, by the time financial markets have devised a common scoring approach upon which to plan and execute a current and thus real long-term strategy, will the political winds that we're already seeing in the US, Germany, Poland, UK, etc., have watered down, removed the political and thus regulatory momentum to encourage mandate such change? Difficult question to answer. I can only say I hope not. Anyone feels to have a crystal ball to be able to answer that question? Nobody volunteering, it seems
No
to me.
comment, yeah.
As you say, Andrew, it's a difficult question to answer. I think it's
Yeah.
There's a lot of talk around that at the moment, isn't there? And the way that regulatory approach is going, I guess we can only hope that it won't be watered down, but very hard to say, isn't it? Very hard to say, I think.
Very hard. And I mean, I can speak only for my institution, which is Swiss Re. I mean, we're committed to this journey. We're not going to make it dependent on regulation. We have to do the painful things as well sometimes. And if this means restricting some of the things we do, also for the benefit of the market, we'll certainly do so. And I hope that there's going to be enough organizations that will follow that, and that regulatory comes on top and creates the right incentives. But I hope we don't have to just rely on regulation, you know, and the political dynamics in order to achieve that challenge. Let's see if there's more coming in. Resilience building has been mentioned a number of times. There are many different ways of doing this, through new infrastructure technology or by transitioning, adapting those existing. What is the preferred way for the panel to build resilience in their portfolio? Very good question. Maybe I can start. I think it's basically two angles, I believe, to the answer. So first of all, as in our case as a reinsurance, when we talk about resilience building, what we actually largely mean is helping the world adapt with the consequences of some of our actions. Of course, we all have the mandate and the wish to improve and support the transitioning to a low carbon type of environment, but we have to accept that certain consequences of the action taken over many decades are already visible in many ways. We just need to look at the trends in cats or catastrophes, floods, hurricanes, droughts, wildfires. I mean, we already today experience the consequences of our actions in many ways. And as a reinsurer, we are insurer and reinsurer, we actually at the forefront of the organizations that help creating that resilience that helps economies to rebuild and hopefully also invest in ways that there's more societal resilience to the business. So closing the gap, the insurance gap on many other nat cat businesses is one element for sure. I think that's the one angle, at least. I think the primary angle from a Swiss Re standpoint. There is then the angle of, you know, how do we change our existing portfolio in a way that it moves into or satisfies certain sustainability criteria. I think there is no way to avoid to restrict things. Maybe people have different views, but I'm a firm believer that it's absolutely necessary to determine which businesses you can no longer support because they don't meet your risk requirements. In the long run, I think it's going to be needed. In credit, the risk of stranded assets is real, and I think completely changes the risk profile of businesses we have done in the past. We have actually sectorial policy for a number of different sectors. I think it's 7. The obvious ones are, oil and gas, coal, the ones everyone talks about, but then there's plenty others that relate to agriculture, nuclear, hydro dams, and a few others that really help us determine what business fits and what business doesn't. I think just by compensating and measuring, we're not going to get there. I think eventually we need to take the responsibility of excluding certain business. And that's a huge challenge because obviously you cannot apply a one-size-fits-all in every situation. We need to go granular, but I believe this is an important piece of what we have to do. That's the Swiss Re perspective and partially also my personal perspective. I don't know if anyone else from the panel would like to add anything to it.
Yeah, just to complement what you already know about the resilience building. It is about understanding, or as I have also said, we see more natural catastrophes. They tend to be more severe ones. So in order to cope with such events, you need to monitor or analyze, or maybe at least even if it's an uncertainty, predict a little bit how often or when it's going to come. You never can say, but at least you need to kind of model it and learn about it and collect data, and then, as you mentioned, to help in the transitional phase to get our goals done. And this can be done via in dialogue and talking with the parties involved.
Thank you, Christine. I see that the connection is getting a little difficult. One more question coming in. Do you think ESG policy requires a proper ESG rating? I know where I have to ask the question. Karine, what is your view?
Yeah, I think I mentioned a little bit that. At least at the Traders, this is something we are trying to work on, but it's a pilot. So we're trying to get the knowledge really to see whether there's some relationship between ESG performance and creditworthiness. That's one. But also if you think about underwriting policy, we were mentioning that before, either customers or buyers, we might end up looking at the ESG performance of our customers and obviously and buyers, right? So it's one approach you can have to have a look not only at trade sectors that you were mentioning right now, but also within a trade sector, the ability of a company to do this transition to a low carbon economy, but also overall its ESG performance related to what the company should deal with, which is again related to his core business and materiality analysis. So yes, the thing is, same challenge as usual. The availability of data is key. And you cannot build up a proper methodology if you don't have reliable information. So that will come. ESG rating can be done if it's based on reliable information and harmonized. That would mean also like for the let's say ESG rating agencies to establish proper reports based on information which is comparable within organization, and that will come probably with the Corporate Sustainability Reporting Directive. This is something we're trying to do at the Traders. So we're working with an external provider and come up with like analyst-driven information to have another look, let's say, of ESG rating. But that's a pilot. We are trying to figure out a little bit what's next. What do you do with this information?
Yes. I think we have probably time for just about one more. How will it be ensured in the future that the various ESG indicators in the rating methodology are included uniformly by all insurers? Is this already planned? That's an interesting question. I have a personal view. That's not a history view, but I don't think we'll ever reach the situation where they are all uniformly applied, as much as we don't uniformly apply other forms of rating methodologies. I think there will be differences. There will be differences in appetite. I think we all need standards to define what carbon footprint is and what it means. I struggle to see why actually we even would want everyone to apply exactly the same logic. I think a well-functioning market functions properly because there are differences in expertise and methodologies, all within a broader framework, I believe, that makes sure that we move in the right direction. But I think having consistency of scores is probably unrealistic. I would think. I don't know if anyone else has a view on that matter.
Andreas, I tend to agree with you. And obviously, right now, at least, still like different ESG rating agencies have different methodologies. So you could come up with a different score with, for the very same company just because they don't use the same weight or because they don't use the same analysis. So that's a big challenge in that sense. Again, I think the EU is working towards like more harmonized ESG ratings. But I would agree with you that then it depends also of, the culture of the company itself. What do you want to encourage? And we always tend to think about the E because it's the more quantitative standard and it's probably easier to measure. But we also have to look at qualitative information and what companies are doing in terms of social and governance aspect. So this is probably I would say this is part of the strategy of each company to decide on which aspect they want to focus on.
Yes. Very good. I think time is up. And by the way, I noticed that we lost 2 of our participants just a moment ago. Very good. So from my perspective, thank you very much, Karine. Thank you very much, Christine and Andrew, for joining. I find it extremely interesting and enjoyable. I would have had a lot more questions, which we can maybe take another time.
Yeah, thanks very much, Andreas, and thank you to all the panelists. I think that was an excellent discussion, and you really sort of brought it into the real world. A lot of the time when we talk about sustainability, it's very much a sort of buzzword discussion and it doesn't make it real, but I think you really brought it down to basics and made it feel like something that people can build on, can work on, and it's not just something that you tick a box for. And it sort of segues me into what our panel is for later today, which is also sometimes a buzzword, and that's about AI in credit insurance. We're going under the dashboard, so to speak, with some fantastic panelists to discuss exactly that topic. But that's for later. That's at 3 p.m. this afternoon, Central European time. So please join us for that. Again, you can watch that session later if you can't join it. And you can watch this session again as many times as you like, going to our website, to the resources section. But thank you again to Karine, to Christina, to Andrew, and of course to Andreas for chairing the session brilliantly. Hope you've enjoyed it, and thank you to our audience for their questions. Have a good rest of your day.
You too. Bye-bye.